everyone to our weekly crypto chat by Huobi Research. As usual, we aim to spark conversations on the latest topics in crypto every week and give our personal take on it. I'm your host, Jet, and with me, my colleague Henson. So we are part of Huobi Research, part of Huobi Group, where we share ongoingly a number of different research reports ongoingly. So be sure to follow us at Huobi_research on Twitter or huobiresearch.medium.com to take a look at our reports. And as usual, be sure to leave your questions in the channel, and we'll get through to them at the very end. And just to note that everything said here is not investment advice and does not represent the opinion of Huobi or Huobi Research, and is based on our own personal opinions. So with that said, let's get started. So for this week, the topics are mostly NFT related, and then we'll probably touch on some happenings in the NEAR protocol as well as some further follow up on the Luna side.
Yeah, thank you, Jack, for the introduction. And so here are the topics for this week. And make sure to stay until the end to hear us talk about the Huobi Candy Drop event, where participants have a chance to win 1,000 USDT. And at the end, we'll be also giving out an airdrop password for viewers of this live stream to participate in the Candy Drop raffle just for the viewers today. And 20 winners will be selected. So to participate the raffle, you have to have average transaction volume of 100 USDT in the past 3 days. Then you need to retweet our Candy Drop event Twitter post and follow Huobi Research on Twitter and use the airdrop password, which we will give out at the end to fill in the Google Docs form. So let's start off with the hottest NFT topic at the moment, Goblin Town.
Yeah, sure. So to give a quick introduction, so Goblin Town really came onto the scene, I would say in the last week. So it was a free mint. Basically, you just need to pay gas. There was basically no roadmap, no Discord, no nothing, and it just popped onto the scene on Twitter. So, Henson, I know you're following the NFTs a lot closer. So can you, briefly just, I guess, give us a rundown on what's going on?
Yeah, so Goblin Town launched without any like advertising campaigns or whitelist giveaway events. So it's a public free mint, meaning that minters can only has to pay gas fee to purchase the NFT, and the project has no roadmap, no utility, and no official Discord. So but however, their website is very well animated and made, and it has a unique style and vibe to it, I think. So many people find their production quality and their art style unique and good. So that's why I think people are buying into this goblins because um, they are so hilariously ugly at the same time, but also well made. So it has became like a meme NFT like Empress. So I think people like its unique style and agenda of the Goblin language. You can see that on its collection description on OpenSea. It's just some random gibberish, which I think is quite funny.
Yeah, no, definitely. I think one thing to note was, I guess, to give people a quick background on Goblin Town and where it kind of came from. I think it came on the scene probably. Well, I started seeing it on Twitter probably a few weeks back, where basically I think it's referring to the fact that we're in such a deep bear market that everyone is in a really bad situation. So basically we're in Goblin Town where no one wants to be. So I think that's where the initial kind of conception of the idea came out of. And it's definitely pretty interesting that they made such, I guess weird monsters out of such a random meme. But I guess, in my personal take, it's a fun project, nothing important. And I guess right now people just want to find something to speculate on the NFT side. Because in general, I think right now after the Luna aftermath, I think a lot of parts of the market has kind of died down in terms of volatility. I think BTC, ETH, has been trading in a sideways range around 30K and 2K respectively. So I guess not much going on. So definitely, I guess it's a fun time to just, poke around some random projects.
Yeah, it's definitely fun. And if you want to invest into this kind of fun and high up NFTs, you should be familiar with the NFT hype cycle model. So I believe that Goblin Town at the moment is at phase two, where its floor price climbs quickly due to hype and FOMO. And we will see it's likely that we will see its price to continue to go up. But of course, there's no way we will know when will it reach its peak. And in phase four and five, the price pullback will usually be very painful for this kind of hyped up projects when interest in them starts to fall. And this is when most holders lose money and sell. So I think if you want to invest in an NFT for long term, you should only invest in projects that you will believe to that you believe will perform well in phase seven. So this is where the hype has died down and the project team are adding additional utilities and values to its holders. So at this stage, successful projects will again create hype through their new utilities and perks, but unsuccessful projects will fail to maintain public's interest, and eventually people will dump on them to cash out and move on to newer projects in the space.
Yeah,
So
yeah, I guess especially word of caution right now, given the fact that we're again in a bear market, so to speak. I think any type of speculation should definitely be tapered down. Personally speaking, and given that for goblins, for projects like a Goblin Town, where there's no utility, they've already said it. Basically, there's no roadmap, no Discord. It's just purely for fun. The likelihood of anything manifesting out of it after the initial hype is probably low, unless someone randomly takes over for the project and starts building some form of utility or a call to action on top of it. So yeah, definitely I would say for this one, I'll probably skip it. So, but definitely an interesting one just to know.
yeah, so moving on NFTs on the Solana network. We see that Solana NFTs are starting to warm up. So according to Radar, recently there are more users on Magic Eden, a Solana NFT marketplace, than users on OpenSea. So in general, I think projects on NFT projects on Solana are very similar to projects on ETH. They are just newer and have a lot of room for speculation and development. And I think the main difference now is just that Solana NFTs have a more friendly entry price due to cheaper gas fees and transaction costs. So
Yeah. No, no.
yeah,
I mean, yeah. I think it's interesting to just note the dynamic, right? I mean, because I guess you'd be surprised by the fact that I think for ETH, OpenSea is basically the main gateway where everyone looks to trade NFTs. Yeah, of course, there's also the community-based project looks rare. But for Solana, I think even though OpenSea, launched and connected with Solana, I think it's a few weeks, at least a few weeks now. Magic Eden is still retained the significant part of its market share. So that's pretty just interesting observation on my side.
yeah, and if you are interested in looking at some other NFTs, you can start with OK Bears and D Gods. They are I think at the moment the leading projects on Solana.
Yeah, I
So
mean, yeah, for those ones, I think in general the floor prices are pretty high. So just word of caution. I think right now, where personally speaking, I think a lot of the money has flown in probably from I think if the Ethereum ecosystem because I personally read online or at least on Twitter that a lot of the people that originally went into OK Bears were I think ape holders. So that was probably one of the main money flows in terms of driving demand from ETH to Solana. Because I guess as you mentioned, Hanson, right? So because of the fact that the floor prices are lower, and the barrier of entry is probably cheaper for the average person. I think definitely there's more rapid speculation on the Solana side right now compared to ETH, but I guess even for OK Bears and DGOS, what are the floor prices right now? I think they're trading pretty high still, right?
Yeah, for OK Bears, they're around 200 Solana, and for DGOS around 300. So still a lot of money, but
Yeah,
not as crazy as Bored Apes and Mutant Apes.
yeah. I mean, do you personally see a NFT bull run on the Solana side, or do you think like we're pretty much near peak, right? I mean, because I mean, right now I don't see where the money's coming from in terms of driving further demand into these projects. I mean, is it just the same pool of capital playing each project, or are there actually new money, you think?
I think at the moment it's just still the same groups of people, the same pool of capital. Like we can see now the Solana NFTs are performing well, but at the cost of Ethereum NFTs price dropping. So I think many people are taking profits or cashing out and moving from Ethereum NFTs to Solana NFTs.
So definitely more of a rotation play, I would say. Yeah,
Yeah.
for sure.
So moving on to next topic, we have
Yep.
Milady Maker.
Yeah, I mean, so I don't know if a lot of people have followed this, but recently, I think in the last few weeks, and then really kicked into the overdrive over the last few days, in terms of like headlines on Twitter was this controversy for Milady. So just to give a quick background on the series, the Milady series is basically, you know, kind of portrayed itself as like another innocent, anime girl NFT profile pic series and the collection was, created by a online collective known as Remilia. And if you go to Remilia's website, the collective website, I mean, it kind of reminds you of 4chan. So, I mean, just for everyone, a quick background. I think 4chan is an image board style forum where, actually a lot of the internet memes and culture actually originated from 4chan. So definitely some connections there in terms of the tone. But just I guess some of you might also know is that 4chan is also painted with a lot of controversy because of the fact that a lot of so-called extremists of various sorts, whether it's like from a political standpoint or a philosophical standpoint, hangs out at the fringes of 4chan. And what it actually was uncovered was that for Milady, prior to just last week. There were rumors going on surrounding the fact that the founding group actually the group behind it was potentially like a bunch of extremists, which were racist, homophobic, and sexist in general, and apparently one of the founders were actually even linked to a suicide cult. So basically this news, just came out, in the last, 24, 48 hours. And I think, what you seen, if you go back one slide, Hanson, what you saw was that fact that I think that the price of the NFT completely dumped as a result of the fact that because of all this controversy for the people behind this project, it really goes to show you, right? I mean, you know, there is speculation within the market, but once people start uncovering a lot of the things behind more of these anon led projects, that's where I think a lot of the dirty laundry starts coming out. And I mean, the market has already kind of reflected the value of the fact that I think a lot of people do not agree with a lot of these views that these founders had and reflected in the price by dumping the NFT. And then I think it goes to show you that I think for the Web3 culture, it's very important to differentiate and distinct the fact that even though people want to pump their own NFT projects, I think there are certain things that a lot of people don't stand for, and they are willing to take an action, I guess, reflecting it through the price. So I mean, definitely, it's good to see that people are not supportive of people and this collective linked to these type of rumors. So
Yeah, so I think as the NFT space becomes more mature and commercialized, it will become a norm for for project founders to be fully doxed and vetted. And because of the high risk involved in projects with anonymous founders, um, these kind of anonymous founder projects will become less and less desirable in the NFT marketplace.
yeah, I mean, my take personally is it'll probably be a mixed bag because I probably would see probably you get fully doxed NFT projects that really want to go fully legit and kind of prove its case by showcasing its team's experience. But at the same time, I think in the Web3 culture, a non culture is also important because of the fact that for the reasons why some people choose to stay anonymous is because of the fact that sometimes they just want to be judged by their work of the work that they produce as opposed to being judged by the previous background, right? I mean, so you've seen in crypto in general, there are some founders that are still in high school, right? And they remain anon because of the fact that they don't want to be judged by the fact that they're still in high school and potentially building a protocol, even though they have the skills for it. So I mean, I think it's definitely a fine line, but of course, I would say that for the average project, it is probably going to be trending towards being more docs, just due to the fact that there, as you can see from this Milady controversy, there are on the fringes bad actors in the space, regardless of how we like it. And I think that is just going to be one part of the transition process to a more mature industry where I think this is going to be demanded for the founders. So.
Yeah. So I think for like fun projects or simple projects, it's completely fine that you can for founders to stay anonymous. So for example, the Goblin Towns, because they don't offer any utility or value to their holders. So I think for that case, it is fine to stay anonymous. But for larger projects that promises a lot of utilities or in real life applications is definitely required for founders to be fully docs and vetted.
Yeah, I mean, I'm still a mixed bag. I mean, even for smaller projects, right? We don't want to be financing people that are potentially backing like suicide cults, right? So, I mean, even
Yeah,
though it's a fringe NFT project, I would say that, you know, DYOR, right? Do your own research because end of the day, I mean, if you're just trying to speculate and flip NFTs, I guess that's fine. But for any type of long-term holder, I think it's very important to really understand the people that you get kind of getting in bed with because of the fact that you know a lot of people choose to remain anonymous not for potentially the right reasons, and it definitely through the behavior and how they communicate with the community and how they interact and how they kind of prove themselves in your interactions with them. I think it's very important to kind of differentiate and kind of assess that if you're a long-term believer of that project, because I do think a lot of people skim over that, especially in the bull market because of the fact that everyone's just trying to make money, everyone's just trying to make gains, and a lot of this is kind of left behind. But I guess now that we're more in a bear market, I think a lot more scrutiny should be placed on assessing the people behind it and whether or not they have the integrity to actually deliver. So
yeah, definitely. So
okay,
on to next.
yeah, let's move on. Okay, so yeah, I mean, moving on to some updates from the NEAR ecosystem. So just last week, Aurora, which is NEAR's layer two solution, EVM compatible, which is EVM compatible, announced Aurora Plus, which kind of sounds like Apple TV Plus, in my opinion. And there's some memes about it online as well. Yeah, but basically, what Aurora Plus was is it's trying to change up a little bit of how people have interacted with networks right now in general. Because right now, I would say for the average person, actually utilizing DeFi or trading NFTs and going through MetaMask, et cetera, et cetera. There's a lot of steps involved for initial bringing these people on, right? And I think what Aurora and Aurora Plus is trying to do, from my understanding, is that they're trying to change it to a subscription model where if you subscribe to just the most basic tier, you actually get 50 free transactions per month. And then, because of that, for anyone that's just new to blockchain, they wouldn't even know that if you were to use a blockchain, that you would need a Aurora token or a Ethereum gas token to potentially transact, right? And I think this is very interesting because of the fact that this removes a lot of the friction because as a first-time user, when I first started in crypto, I was really frustrated by the fact that I didn't even know my transaction went through. It took hours because I didn't set up the right gas limit, et cetera, et cetera. And there were no really instructions back in the day to kind of guide me through that. But I think with this kind of service where more subscription based, there are kind of more guardrails and people there to kind of provide customer support in case anything happens. And I think that is just part of the customer experience that will start to kind of manifest itself in crypto because of the fact that right now it's a lot of DIY in terms of trying to learn everything. But for the next wave of adoption, I would see this kind of solution being more adopted. So just to give a quick rundown, what Aurora Plus does. So like I mentioned, 50 free transactions per month for anyone utilizing it. And then you will also get access to ecosystem rewards. So I think what they're trying to do is they're going to try to bring a bunch of different protocols that's being built on Aurora. So lending, DEXs, potentially, I guess, trading NFTs as well, all into kind of one interface. And then through that, you can stake relatively easy because you can compare all the different types of tokens and rewards that you get. And Aurora will also be helping and bringing some further incentives from those projects onto this kind of platform. And end of the day, right? The difference between Aurora and maybe say Avalanche or Solana is the fact that Aurora doesn't use its own Aurora token for actually transacting gas. So it actually uses ETH. So I think the reason why it's kind of trying to bring everything together is because Aurora only becomes valuable if the ecosystem as a whole kind of succeeds, right? So it doesn't make any money on the fees because of the fact that it's transacting in ETH, not its own Aurora token. So I think that's why they're trying to figure out how to potentially bring further value accrual and make the user experience a lot more simpler and a lot more easy. So they've already also mentioned, I think so right now if you actually go to aurora.plus the website before probably for the next 2.5 hours if you sign up with your wallet you'll get access to a free airdrop. So this is a limited time. I think this basically today's the last day. And they have also mentioned that potentially in the future to offer paid premium plans, governance participation, private transactions, and also a potential KYC road. So I mean, of course, like you might be asking why would potentially you want to be KYC? I think probably in the more medium future where there will probably be a suite of products where it will require you KYC, similar to if you transact on Huobi, you will require KYC. And also apps where you don't need that. So I think they're starting to build out kind of like a bridge between both the Web2 space in terms of how everything goes, is funneled through one interface, and also tag on the Web3 experience on the back end. So I think that's what's going on here. It's pretty interesting concept. Definitely interested to see how that will potentially kind of work itself out. But definitely for anyone interested, just connecting your MetaMask and signing up with your email will get you a free airdrop in the next few hours. So definitely just worth to check it out, even though you might not want to interact with the ecosystem afterwards. But hey, free airdrop. Who doesn't like a free airdrop, right?
So there's no requirements or such to get an airdrop. Just need to sign up, right?
Yeah, you just need to connect your MetaMask wallet, sign up your email, and then I think you're good to go. So yeah.
Yeah, great.
Yeah, so I guess let's move on to I guess another follow up to the Luna debacle. This time, just want to share I think some contagion effects surrounding after the aftermath of UST I think right now I think they're close to finalizing the fork. But this is just talking about Anchor, and apparently, the startup stablegains, which is actually incubated by Y Combinator, which is a well-known startup accelerator in the US. Which was founded back in like 2005. It launched more than 3,000 companies, including like Stripe, Airbnb, Coinbase, Dropbox, Twitch, and Reddit. And so it's a pretty prominent and well-known startup incubator. But the problem is a lot of the more recent startups that they've incubated is a lot more, I would say, um, you know, sketchy, so to speak, because of the fact that, like, for example, stable gains, right? So what they offer their client base was the fact that, hey, if you deposit money into stable gains, you would be accessing, 15% deposit rate with no issues. But the problem is that they didn't fully explicitly say that your money would actually just be all deposited into Anchor, which at that time was earning 20%, and they will be basically skimming you between the 20 and the 14 and 15% that they will be offering, and that's how they made the money, right? Which is like I guess charging 5% for literally accessing Anchor is, I guess, if you're not exposed to crypto, is maybe a good deal. But at the same time, right? What if any one of you is more crypto native, so to speak? It's a pretty big discrepancy because of the fact that they didn't fully highlight, I would say, the risk associated with it, especially because of the fact that I think if you see the snapshot on the left, previously on their website, they said that they're actually making use of not only UST, but USDC as well in their transactions, and where they'll be applying and depositing funds to generate this 15% yield. However, it turns out that it was actually all dumped into Luna, and I'm pretty sure they're not the only one, right? So I'm pretty sure, based on you can see on the tweets on the right, there are a number of these so-called fixed deposits fintech apps that were kind of incubated in the last year, where I'm pretty sure a lot of them has UST exposure, and I'm pretty sure that a lot of them lost all their money on the clients, right? So for stable gains themselves, they lost 47 million of the client's money. So that was just around 5,000 customers that they had, which was not much, but I mean, if you think about it, I guess this is a good word of caution, right? So if someone's offering you a 15%, I would personally do my own research to understand where that 15% is coming from. And I guess the issue is that with a lot of these new fintech apps, targeted towards, our generation and Zoomers, the main issue is, right? I think a lot of people don't really care about finance or want to understand it, and they just want to deposit and make some money, right? But the problem is when the rates there, is such a big discrepancy relative to what you would get at a bank. I think it begs for you to at least ask that question about, how are they actually going to make this money? Because I mean, it's all good and it's all good when the markets are doing fine, but I think this is kind of the situation where when kind of things hit the fan, and now like we're seeing who's swimming naked. That's where a lot of this issues start to kind of manifest itself. So definitely in this current market situation, if anyone's offering you like any crazy fixed rate on any stable coins, I would be a lot more stringent in terms of just checking out the risk, because of the fact that right now, I would say, given the fact that a lot of the token prices are very depressed, a lot of this yield farming and liquidity mining rewards are being offered on stablecoins are probably in the low single digits right now. So as a result, if anyone if there are any type of projects that offer you a significantly higher premium compared to what it is right now, definitely do a little bit more research on that end, I would say. So
Yeah, definitely do your own research and be careful in this space with full of scams and rug pulls. And
yeah,
so
I wouldn't even say it's scams and rug pulls. I would just say in general, it's just a lot of these things are not sustainable. I mean, they are Ponzi like for a reason, and because of the fact that a lot of these rewards rely, if you think about it, right? How does liquidity mining work, right? For people to access usual liquidity mining, they have to buy potentially the token that they're trying to liquidity mine because of the fact that they have to provide liquidity into a liquidity pool, right? So for example, like token A and ETH pair into, let's just say, a DEX, you want to be buying up at least 50% value of whatever you want to invest, liquidity mine into the pool. So if you're buying 50% of the value that you want to contribute for that token, that drives the token's demand. So technically, that increases the APY on that token
Yeah.
because of the fact that as token price increases, you're actually earning more because the rewards are calculated based on the token price.
Yeah.
So as a result of that, it might seem like it's very, the rate is very lucrative, like over 100% or whatnot, and even higher. I've seen a lot in most cases in the bull market. But this is because of the fact that initially when these programs start, there's a lot of demand flowing in, and that's why the yields look so attractive. So, for word of caution, for any beginners or people more new to space, these rewards usually don't last. I would say like I've seen things last for a few days max to a few weeks. So I mean, definitely, a lot of these situations are keeping one eye out the door, so to speak. So.
Yeah. So,
Okay,
moving
so
on.
let's move on. I mean, so yeah, for this time, in terms of new token listings, so again, no, not financial advice. But Huobi will be launching two new tokens. So the first one is Bike Rush, BRT. So Bike Rush is a ride to earn health and fitness app, where basically users will be equipped with bikes and move outdoors to earn tokens. So this is a similar concept to Stepin. If you guys are not aware, Stepin is I guess really hot and trending move to earn app. Basically, you get 10 minutes per day to walk around and make money. So, I mean, is this sustainable? That's another question. This is a derivative project of that similar kind. So definitely DYOR on that one. And then moving on, so the second one is Meta Visa. The token is MESA, MESA. So basically, for the Meta Visa protocol, what they do is they help establish and display reliable on-chain identity and credit records, such that if you want to interact with DeFi, NFT, GameFi, DAOs, and DApps, you will have basically a social credit score system, so that people understand whether or not you're trustworthy and people want to deal with you in that setting. I mean, this one is slightly interesting, but at the same time, I think it's a little early, personally speaking, because of the fact that I think right now, given the fact that building a credit score is good, but I think a lot of back end stuff still remains, in terms of the lending side or whatnot. Before I was in mainstream adoption, will probably kick in, but definitely an interesting one, to just I guess read about, just for personal interest. So.
Yeah. So to accompany the new coin listings, Huobi has launched a candy drop event for its users. So any user with average spot trading volume of that is above 100 USDT of any digital assets for the last 3 days can register for the candy drop event. And the candy drop token will be randomly allocated to registered participants. So winners will receive the tokens for free, and the prize will be delivered to their spot trading accounts within 12 hours. Participants can win up to 100 USDT per entry and up to 1,500 USDT per week. So we'll also be airdropping candy drop double up coupon to participants who did not win anything. And using the coupon will double your chances to win in the next candy drop event. And also for each candy drop event, one lucky star winner will be um, selected to win a grand prize of 1,000 USDT. And to find out more, you can go to the Huobi app and click on the new listing event page. So for this week's we have invited one of our Candy Drop Lucky Star winners to share with you experiences participating in the event. So we will try to reach her now.
Yeah, so in the meantime, I guess, everyone be sure to drop your questions. So after the candy drop event, we will be answering a few of them. So definitely drop your questions now, and then we'll get back to them after the segment. So
Hi, congratulations on winning 1,000 USDT in our Candy Drop event. We have some questions to ask you about your experience with Huobi and the Candy Drop event. So first of all, how long have you been using Huobi to trade coins?
Uh, I believe it's about 1 year.
Oh, okay. So like how has your experience using Huobi been?
Um, I have been using Huobi to trade since I started investing in cryptos, and it just become to a habit. I think Huobi is so good because it is easy to use and can satisfy all my needs. Also, I noticed that Huobi is updated frequently, and the app is getting better, which is great.
Okay, so how did you find out about this Candy Drop event?
I found it on the platform. Many of my friends are also playing, so we are often talking about it.
How often do you participate in this Candy Drop event?
I almost participated in every project. I like to invest in cryptos. I believe my daily transaction volume can fully meet 100 U on average, which is also the activity threshold. So I basically will not miss any project.
That's nice to hear. So, and why do you like participate in Candy Drop?
I think Candy Job is a very good activity. This it allows me to obtain the latest online cryptos for free, and the project quality is high. Also, Candy Job is updated fast, and the rules are simple and clear. Also, the participation threshold is low, so anyone can play it, and the price pool is very rich. So I think the recent activities like Candy Job, Double Chance Coupon, it is quite good. Because it takes care of those who participating in the activity. In the activity, if we don't win the lottery, we can also get double coupons, and the probability of winning next time is bigger. So I like to participating in Candy Job.
Okay, so did you ever win any prizes in Candy Drop before, and like how many times have you won? What is the total value of your winnings?
So you mean the total value of winning?
Yeah. Have you win any prizes before?
Uh, I think uh I have won 3 or 4 times. It's adding up about 300 U, I believe.
Okay, so for Candy Drop in general, like which aspect can Candy Drop be improved?
Uh, I hope more popular cryptos can be listed on the platform, and hope my favorite coin is selected.
Okay, so what do you think about Candy Drop's advertising?
Um, I think the advertising is quite good. I'm often be reminded to participate in any job in time, and I like the poster design. It's very nice.
Nice. And lastly, would you recommend Candy Drop to others, like your friends?
I have already recommended it to many of my friends, and they basically participated in every issue.
Yeah, it's nice to hear that you recommended Candy Drop to your friends, and I hope that they will win big as well. So I would like to thank you for coming to this Q&A session. And I believe that everyone now has a better understanding of Huobi and the Candy Drop event. So thank you for your time, and I wish you all the best.
Okay, thank you.
So now we will announce our airdrop password for today's live stream Candy Drop raffle. Again, to participate, you have an average transaction volume of 100 USDT in the past 3 days. Then you need to retweet our Candy Drop event post, follow us, Huobi Research on Twitter, and use the airdrop password. I love Huobi to fill in the Google Docs form in order to sign up. So Jet, let's move on to our AMA session.
Yeah, I think just so so I'm seeing I like Huobi as a password. Is it I like Huobi or I love Huobi? Just
I
so
like
people
Huobi.
don't get it wrong, right? Okay. So going back, I guess, to questions, I just took a scroll, and then I think I saw there were a few questions about Aurora Plus and where to learn more. So just to give the URL, it's aurora.plus. Okay. So it's not .com, it's .plus, PL US. And that's where you guys can connect to the site using your MetaMask wallet. And basically, I think, yeah, if you sign up basically in the next 2 hours with your email, you will get potentially airdrop. Of course, no guarantees on the amount and not financial advice. But yeah, I mean, personally speaking, just from my personal experience, I've used Aurora probably, I would say, like 4 months ago, back when they were offering gasless transactions for everyone, for every transaction. And then I would say in general, the user experience is pretty good. But just to note, right now, I would say it's definitely one of the earlier chains where there's not too many, I would say, live projects. So it's definitely not as vibrant as Ethereum or Solana, but there are some projects that have come up. So the main DEX on Aurora is called Trisolaris. And basically, Trisolaris, is where you mainly do the token swaps. And if you want to bridge stuff to Aurora, that is through the Rainbow Bridge, where it basically can connect you from the Ethereum side to the Aurora chain, and that's how you can get bridged. I think the fees are not that high as well. And then, in addition to the DEX, I think some interesting projects that people can take a look at is like one's called Bastion. So Bastion is a lending protocol that is built on Aurora, and they're quite a big number of backers behind it. They previously had a locked up where I think over $300 million worth of funds were locked up in exchange for tokens to kind of generate their initial liquidity for the lending protocol. So yeah, other than that, I mean, I haven't personally played around with too many other things on Aurora. I mean, of course, with all these earlier or more infancy stage chains, there's definitely probably going to be a lot more stuff probably coming in the next 12 months. So I mean, from a personal research standpoint, I mean, it might be a good time to take a look and just to learn more about the ecosystem. Previously, before I would say the bear market, people have kind of compared Aurora and NEAR as kind of like the next Avalanche or Solana, where they were previously speculating that potentially that might be the next ecosystem. So I mean, definitely it's not a small or like a shady project. So there are a lot of big backers behind it. But of course, in this environment, in this market, given the fact that a lot of these big backers might have gotten in at lower prices for these funds and VCs, right? So definitely be aware of in a bear market, people might just want to sell the tokens and dump on you. So be aware of that, and whenever playing with these new chains and buying new tokens. I think in addition to that, I don't see any other questions. So I think Henson, I think unless you have any other comments, I think we're good, right?
Yeah, no, well, thanks for coming for this week's coming to this week's weekly market chat, and don't forget to follow us on Twitter and make sure to tune in next week.
Yep. Yeah. So again, just to repeat what Hansen said. So feel free to follow us at Huobi_research on Twitter, or huobiresearch.medium.com, where we have a number of different reports. I think I recently just released a post-mortem kind of Luna report where we were talking about potential scenarios of how the chain might look afterwards. I mean, personally, I'm a little bit more skeptical about all the plans going on because of the fact that right now, I mean, there's a lot of I think things being uncovered by how they handled the situation during the fact that when the UST initially depeg. So I mean, a lot of speculation going on in terms of whether or not they're actually able to bootstrap a significant amount of interest because of the fact that who really wants a overhang or a lot of these problems to basically repay UST holders, and a lot of developers losing a lot of money previously in the treasuries. I think there's just a lot of baggage, right? So when there's a lot of baggage, especially in crypto with how things move so quickly, do you really want to be a part of that baggage? That's the question. And are there better places to look where for a developer or for an investor, right? It'll be more clean, where there won't be this overhang. Because if you think about it, all these UST and Luna people that lost a lot of money will probably be want to at least try to recover some of the losses that they made, right? So if any of this new tokens get dropped to them, the likelihood of getting some sort of sell pressure might be pretty high. So FYI on that, and just to be aware, at least aware if you are going to trade or interact with Luna protocol. For myself personally, I'm on a wait and see dynamic right now, given the fact that again it's a bear market, so there's no real urgency to do anything too quickly. So. With that said, thank you everyone for attending today. And definitely look forward to speaking to you guys next week.
Yeah, thanks.